Today I want to talk about the reverse split that just caused a giant short squeeze over the last few days, and also a number of other recent splits that also caused short squeezes over the last year or so. These squeezes occurred directly after a reverse split, within days of the split taking place. So stay tuned and let's make some money. And now I'm going to dive straight in with the key information. So Caesar tweeted saying Iron performed a reverse split 1 for 10 and also changed its CUSIP number today as of the 30th of December. At this very moment of the tweet, it's up 1,185% on the day, and that's not even the top. You can see here on Webull, Iron performed a corporate action of a 1 for 10 reverse split on Friday, December 30th, 2022. GMTX also performed a ticker change to Iron on the same day. Basically, they performed a reverse split and also a ticker change to change the CUSIP number. Iron also changed its corporate name to Disc Medicine Incorporated on Friday, December 30th as well, and changed its CUSIP number as well. And we can see from the screenshot that Iron was up from $1.35 all the way to $17.35 on the day, or a 1,185% increase. Now, if AMC performs the Ape AMC conversion and then performs a 1 for 10 reverse split, the stock price will be somewhere between $20 and $40 per share. If it then experienced a 1,185% increase, AMC would be trading somewhere around $200 to $400 per share. And obviously this would just be solely on the day of the split, let alone what happens on the days following. And on top of that, Nate tweeted saying, correct me if I'm wrong, because this CUSIP stuff is not my expertise, but this is what happened to Iron. He said this forced the shorts to cover only 1.4 million shares. Iron actually had a very small short interest and there was only 1.4 million shorts that needed to cover. And he says now, AMC has 108.5 million shorts that are legally disclosed and likely has many hundreds of millions, if not billions of shorts illegally created through the synthetic shares on top of that. So if 1.4 million shorts closing their position can cause a 1,165% run, imagine what can happen after 108 million AMC shorts need to close, if not hundreds of millions or billions. But it's not just that, because Tony Denaro also tweeted a number of other reverse splits that have happened recently that also caused giant runs. Tony tweeted saying we know of hundreds of failing penny stocks that didn't do well after a reverse split, but I sorted recent reverse splits for companies with a market cap over $1 billion. Basically what Tony Denaro is trying to find is companies that are not penny stocks that have recently performed a reverse split. Obviously OTC stocks that perform reverse splits typically don't do well because the OTC market is not regulated whatsoever. You could say the SEC simply ignore the crimes that happen on the New York Stock Exchange and the NASDAQ, but at least it experiences some further regulation compared to the OTC markets. While they can seemingly create millions if not billions of synthetic shares on the New York Stock Exchange, there's seemingly some things they can't do, as obviously the regulation on the New York Stock Exchange is slightly better. Now, Tony said there's actually many companies that had performed reverse splits with a market cap over $1 billion, but here's a couple of results for you to dig through. Now, firstly, we have the OVV stock. This performed a reverse split somewhere around 2020 at $1.98 per share. Now, this stock had a fairly small run, up 191% to a high of $62.41. Now this is also fairly close to its current price right here at the very end of December or the very start of January. So it seems that this stock actually hasn't fallen after its short squeeze. Also remember that this price of $1.98 is actually the price after the reverse split. If this stock did a reverse split of 10 for 1, it would have been trading around 19 cents pre-split and $1.98 post-split. And then obviously over the next few months, it steadily squeezed from $1.98 all the way to a high of $62. And the next example that Tony provided is the stock FLNG. This had a reverse split somewhere around 92 cents and then increased all the way to $38.24. Now that is a 2,448% gain after the reverse split. Now that 2,448% increase is the same as AMC going from $30 post-split to $1,446 post-squeeze. Now, as I said, remember this 92 cents is their post-split price, aka pre-split they would have been trading at 9 cents and post-split 92 cents. But it obviously had a very quick same-day run-up and then a fairly slow squeeze after that, all the way to $38.24. Again, we've got another example of CLDX stock that increased from $1.50 all the way to a high of $57.20, a 1,666.99% price increase. And Tony's final example is the stock EDU, which increased from $8.40 to a high of $42.19, an increase of 175%. Now, obviously, that's just a few examples, but it does show that stocks over $1 billion of market cap, aka stocks that aren't penny stocks, actually have a fairly reasonable response to a reverse split. But he does say that it's not to imply that every company over $1 billion market cap did well after a reverse split, because some went down as well. But he says we shouldn't focus on penny stock failures. He said you have to start by comparing something compatible. Every split or reverse split is a company and fundamentally specific. Obviously, all companies have different fundamentals, they have different technicals, they're all different companies and will likely react in different ways. Some stocks may be heavily shorted, some might not be heavily shorted, some might have examples of synthetic shares, and some might not have any synthetic shares. But what it does show is that actually many stocks do squeeze after a reverse split, with varying degrees of success. Some increase only by 200%, but some increase by 2,400%. Now, I think part of the reason why these stocks squeeze after a reverse split is a result of the CUSIP change. As Mr. Kilo pointed out, he's got a screenshot from FINRA that says a firm may sell an incorrect CUSIP from a customer's account or close out of a short position and subsequently cancel the trade after the settlement day. Now, it does say on the FINRA website that it's specifically applicable to municipal short positions, not necessarily applicable to all short positions. But I do think it's still worth a read to see how the CUSIP change actually affects short positions. Now, on the FINRA website, this heading says identifying and resolving firm short positions. It says FINRA has observed that most municipal short positions, aka not necessarily all shorts, are inadvertently and may result from branch or trading errors, duplicate transactions, the sale of a security in the process of a partial redemption or a partial call, or a delay in delivery of the securities from a counterparty. In addition to the scenarios explained above, two common situations that may cause short positions are described below. It says a firm may sell an incorrect CUSIP from a customer's account and subsequently cancel the trade after the settlement day. However, the firm has already delivered the security to the counterparty and it's no longer available in the market to effect a buy-in, leaving the customer with a long position that identifies to a firm short position. Now, obviously, when the CUSIP has changed, that short position no longer relates to the new company or to the new CUSIP. Therefore, that short position can't be transferred or changed. It just simply has to be closed out and the underlying shares or synthetic shares have to be cancelled. Therefore, the closing of those shorts and the cancelling of the no longer applicable CUSIP number is effectively what leads to that run up in price. And it seems this, combined with the FTX collapse, is already causing the shorts to begin to panic. As Bigham's tweeted, he said, "Ouch, it sucks to suck." We can see that AMC current cost to borrow rate has increased again, not from 104%, not from 114%, but to 128%. Right now, these shorts are paying over 128% on average per year to maintain their current AMC short positions. When you factor in that APE is about to combine with AMC and a reverse split is about to be performed, and the fact these hedge funds have to hold 150% margin on their short positions, we can see that shorting AMC is about to become at least 10 times more expensive. Especially when you factor in these massive borrowing costs. If a fund is currently shorting $10 billion of AMC shares, they'll need to pay at least $12 billion per year in borrowing fees. On top of that $12 billion in borrowing fees, to take out that $10 billion short position, they would have had to post $15 billion in collateral. And obviously, if the price does run up by 1,000% or more during the reverse split, these funds are going to have to post at least $150 billion in margin, and they're going to be paying at least $120 billion in annual borrowing fees. Now, I also think it's very interesting to look at the OBV for AMC, for Credit Suisse, for Tesla, and for Amazon. We can see with Amazon over the last year, as the price has been decreasing, the OBV has been falling as well, as shareholders have been selling out of the company. We can see the same with Tesla. The price has decreased and shareholders have been selling out during this decrease, hence the falling OBV in line with the falling share price. And again, with Credit Suisse, we can see the falling share price and the falling OBV, as many shareholders are selling out of their Credit Suisse shares. But with AMC, we have seen the declining price, but we have not seen a falling OBV at all. Shareholders are still holding their AMC shares. The price of AMC has simply been falling due to these ladder attacks and due to the hedge fund manipulation, but there's still hundreds of millions, if not billions of shares of AMC currently being held. And on top of that, Hang Loose has tweeted saying, wow, it only took retail just 3 months to buy up more than 10% of the entire GameStop free float and to DRS their GameStop shares. He said that number is more likely to be 20% of the float plus, because that 10% calculation is just the people that hold GameStop that choose to DRS their shares, and especially because those people that choose to DRS their shares typically only DRS half. Therefore, if 10% of the entire float was locked up in only 3 months, you can imagine at least 20% of the float was actually purchased, as many GameStop retail investors don't DRS their shares or don't DRS all of them. You can see from the GameStop AQ, it says as of April 30th, 2022, 12.7 million shares had been directly registered. But as of July 30th, 2022, aka 3 months later, or technically 4 months, it says 71.3 million shares of our Class A common stock had been directly registered. Now obviously you have to factor out that 3-for-1 split dividend that GameStop issued, but if you factor that out, that's still around 18 million pre-split dividend shares. Basically meaning that retail investors increased their holdings from 12 million shares up to 18 million shares, buying 6 million pre-split dividend shares for roughly $180 million. And he said, but what's even crazier is that since October, institutions and ETFs bought 60 million shares, which is 25% of the flow. He said, somebody please explain to me how 40 to 45% of GameStop's totally issued shares and totally issued float has been bought and DRS'd in the last 9 months. Somehow 40 to 45% of the float has been traded and purchased in the last 9 months, but yet its stock price is down almost 50%. He said whether you like DRS or not, it's absolutely refreshing to have an official company provided data source showing us just how many shares are being bought by retail investors. But he said it's an absolute scam to see all of this buying while the price actually decreases. And he said it's undeniable proof that markets are being controlled in a way to suppress true price discovery for all to see in a very easy to spot way. It's clear to see that manipulation is ongoing not just in the AMC stock, but in the GameStop stock as well. GameStop retail investors have bought hundreds of millions of dollars worth of GameStop shares, but yet the share price is down over 50%. But maybe the AMC reverse split will fix all of this due to the changing CUSIP number that will cause these shorts to cover. And as Tony Denaro tweeted, and as Caesar tweeted with Iron, it seems these reverse splits do actually cause a short squeeze. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!